Welcome to this very special broadcast of Market Masters. We have a Market Master, Raamdeo Agrawal, the chairman and co-founder of Motilal Oswal Securities, and there is a reason why we've called him. The indexes are at all-time highs. 20,000 seems round the corner for the Nifty. The mid-cap and the small-cap index, after a long gap, have notched up significant gains. And what is more important is that there isn't even one foreign brokerage left. Every one of them are queuing up to give more rosier picture about the Indian stock markets and the economy. So is this a damn good long-term story, or is this a point where everyone is confident, so we should worry a little? For a person who has seen all these kinds of cycles, these questions would be very important. Raamdeo, thank you very much indeed for joining us over here today.
Good morning and welcome to this morning. Yeah.
Sir, I wanted to ask you first about this, a positivity. Mid caps, all-time highs, small caps, all-time highs. Are you first worried that there is a bit of an overdoing in the near term, a froth?
Yeah, so I had anticipated this in the sense that didn't know about small, large and all, but I was knowing that one day foreigners have to join the this party, because domestics since COVID, because of massive onboarding of retail from 30 million to 120 million of your accounts, that has SIP boom is on at 15,000 crores per month. So that was that cushioned the sell-off by foreigners.
Yes.
Now that that journey is still on, retail is still on, and on top of it, now foreigners also want to buy in.
Yes.
First, they want to buy in what they have sold, and then they want to top it up, because now India is a far more important market in the global scene at about almost close to $4 trillion. We have 4% of global GDP.
Yes.
And even market cap wise, almost $100 trillion is the market cap worldwide. We're at about 4 trillion. But yeah, about 4 trillion. So we're again 4%. But their allocation is nowhere at aggregate level. Their allocation may be about a percentage or so if you see the total number. So I think there is a lot of gap between what they should be allocating in the years ahead and decades ahead. Then what is the allocation today? Whether they take the call today or they take a pause and then come after 3 months or 6 months. But I see on a 5-year, 10-year basis, one way FI flow. I mean, of course, we have to play our part of it in terms of corporate earnings and other things. And actually, there is a likelihood that market may re-rate to a different level altogether, in the sense that from 2021 P multiple, because the only way you can accommodate flow from both sides is either there is a massive boom in the paper flow from the corporates, or the market itself re-rates to 25, 26 times before, and then of course paper flow will come. So that's the kind of situation right now. Something may change.
That's an excellent start to this conversation, because these were the questions I wanted to ask you. At the moment, what do we worry about Nifty? We worry that it is very close to its long-term average, or in fact higher, one and a half standard deviation above its long-term average. But in euphoric times, it can go even to 21, 22 times.
Yeah.
So do you think that we should be worrying now that we are, above the long-term average? Can there be a sell-off before that?
Yeah, I mean, see, there's so many moving parts. But I think most important, the corporate earnings. We are right in the middle of the season.
Okay, how do you measure that? Are you happy with...
Yeah, so far, not many disappointments, but actually the banks have kind of really been fantastic. I mean, way beyond any analyst estimates. So I think you've seen the last, on Saturday.
Yeah, I see.
There was a lot of, everything was around 50% kind of a growth. And and the analysts will still say there will be 17% for the year. So I think that's where the thing is. And even the cost inflation which happened because of post-Ukraine and last year commodity inflation and all, that is yet to, pass through. And I think most probably in September quarter, you'll see even more dramatic fall in the raw material cost, and hence margin expansion for the non-financial companies, consumer companies or cement companies, steel companies. You see margin expansion.
So you would say even entering at this time or continuing to increase your investment. I mean, I guess everyone is invested.
Yeah.
But continuing to top up would be your game plan?
Yeah. I mean, don't bother too much about the market levels, because this all-time high is for last 75 years. It is not for next 5 years.
Okay.
We are going to see significantly higher Nifty, Sensex in next 5 years. Almost, I would say, double from here.
So no red flags in your mind?
No, red flags means you have to be cautious, because you can't buy anything at any price. You have to be careful what exactly you are buying. You do your research. And you are, in any case, topping up your portfolio in the sense that if you are 80% invested, 90% invested, you are finding an opportunity and getting into them. And I think from here, every company or every industry will move differently in the sense that everything will not fall off. Okay. There is something which has run up too much, that will fall off, but simultaneously if you see, something else will do very well. Like tech was falling behind the curve, but you see what happened in the last 1 month. Everybody was underweight on tech and they got punished. So I think the story will keep changing, and I think the whole market will keep, if both the flows continue and corporate earnings remain intact at about 25% current as predicted, I think we are in a good wicket.
Okay, I am going to come back to the market questions, but since you raised the issue of tech, I do want to discuss one or two sectors which obviously are important. Tech.
Yeah.
What would your personal view be? The guidance we got from Infosys was a bit heartbreaking, shattering, confidence shattering. What's your sense? Is it already time to dip in, or do you want to wait and see how these things, how the cloud clears?
See, this tech has a history of, it's an adaptive kind of a thing in the sense that every 3, 4, 5 years there is a new thing coming in. Like Y2K came, people came for bodies, those who can quickly sort their problem. Then came the ERP boom. Then came the .com boom. Then came the all this webs and everything online. So the 5G,
the
6G, digitization, now digital, then all this.
Now it is AI.
Now it is being talked that AI is yet another next frontier. So it is going to be different. It is going to be huge, but it is going to take time. Right now, everybody is trying to understand what they can do. And as the applications they come, I think the mandates will become bigger. Clients will also be clear what all they can do. And even the service suppliers, they'll also be very clear what kind of competencies they need to build so that clients can be taken care of.
So you personally are using this dip to buy?
I'm allocated in the sense that even before the dip, we were not grossly underweight or something like that, except that we were much more on the large mid-sized ITs for a growth differential. But basically, we were there because we knew that, because see, look at the today market moves. In US, it's only about tech companies. With those 5, 6 big companies, they are only driving.
So there it is, of course, a crazy.
Yeah. In India, it is led by financials. So someday, we will follow the tech, but our digital side has done very well. In the tech, all the digital companies which got hammered post in last 12 months, I think they have come back very well.
Which is what I wanted to ask you. I mean, Zomato, I have read your reports and you all are very bullish. Yeah. Do you think that there is a second coming for, the Paytms, Zomatos, Nykas, everyone who was a marquee name in e-com?
No, seriously, they have a second coming. They are well funded.
But valuations are now...
Yeah. Well, it is very tough to figure out the valuation in a conventional way. Okay. See, if you do valuation based on P or something like that, there is no E. So what kind of P multiple you talk about? So it's all in the... first thing is it's the option value. Second, you have to also do a lot of adjustment in terms of trying to understand underlying value, in the sense that their books don't have any capitalization of any expenses.
That is true.
So that you have to adjust in some way and then try to see, or maybe you see, say 4 or 5 years out, if you have the courage to see 4 or 5 years out for these companies and try to do some kind of conventional P multiple. So, but this is the frontier. This new tech companies like Zomatos of the world or Swiggy or Policybazaar, Paytm, I think these are the companies which will, they are well funded, and I think they will have good time.
They'll cut fresh ground. Okay, let me come to the more conventional, the usual banking, the one that we should discuss because it's 40% of the market.
Yes.
Now, would you think that HDFC Bank, after the merger, may underperform because, there is a lot to lead? Would there be any worries? Would you rather bet on, ICICI or Kotak because of the fact that they have to carry a large load?
It's not about this or that. Every bank has its own merits. This is the most successful bank in the last 25 years. And they have created, and the CEO has gone on record saying that we'll create another HDFC Bank in the next 4 years. Yes. What more you want? Your index is going to do 12-13%, and they're guiding for 18%, I don't know, top line or bottom line. Okay. But clearly, and so I think it's an outperforming stock. That doesn't mean that there is no other bank which can outperform. Okay. So I think in their own merit, this needs to be looked at very seriously because there is no everybody is kind of bit skeptical about their outlook. But look at what they've created and the way they are going about it. And this merger, post-merger, at the time of merger, there are a lot of readjustment of the ownership.
The worry is, I'll tell you what, I mean, we have always used to seeing HDFC Bank the best in margins among the big banks, the best in ROA among the big banks. Now they are second in both these aspects with respect to, if you compare it to ICICI Bank. I'm not still bringing Kotak because they have, it's smaller in size compared to them. So, you know, that worry is there.
But size, they are way above.
Size, they're way above.
I mean, see,
they're double ICICI.
Yeah, the dominance in the marketplace, when you say that I'm at 10, 12%, 15%, 17%, you see in bad times. See, right, this is a good time. Yes. In good time, when the credit cycle is good, it doesn't really matter that much. But there is a little ripple in the economy, and then you see how this tall, big guys, they will stand up. And I'm not comparing HDFC with any other bank. I'm saying the HDFC alone, because they can't compare. Their size is different, their growth rate will be different, base effect is different. So,
but what about the disruption to housing finance itself? Because they were anyway very good in housing finance, and now you have cheap money, cheap raw material to boot.
Yeah.
So does that make life difficult for other housing finance companies? You should know it better. You have one.
No, I think they'll become super prime in the sense that it will be very difficult to compete with them because now they have distribution of HDFC Bank as well as HDFC and cost of money which is invincible. I mean,
life
the lowest.
Is tough for other housing finance.
Yeah, so they knew the game very well.
Yes.
See, a lot of time what happens is that you are actually not that good in housing finance. But the one thing they know very well is the housing finance. So the kind of cross-sell they can do, so it's all promising thing. But how they execute on the ground, that we need to see over a period of time. But I think they will, other super prime lenders, they have to be really cautious on that front.
Okay, so that's a challenge to even the existing ICICIs and the
in the bracket.
Yeah, the bigger challenge to the non-bank space is coming from Reliance, Jio Finance. But that question after the break. Give me a minute, we are back. Bazaar audience, you will get to see the entire interview after market hours.